All right, well, to help us set up the trading day for this hump day, we welcome in Kevin Hincks, co-host of Fast Market, live from the CBOE. Very good morning to you, Kevin. So, new all-time highs closing for the S&P 500 and the Nasdaq. What do you anticipate we could see from here?
Good morning, Sam. Yeah, we are consuming and digesting information. CPI yesterday, waiting for PPI. But you started your comments with a very important point. Yesterday on the CPI release, yields spiked lower to 4.23 and then rallied for the next hour or so up to over 4.3. And now, Sam, they're right back close to the lows from yesterday morning. So this market is unwavered by any core CPI that may have seemed elevated. It might be due to the fact that Scott Bessent is out making comments this morning on Bloomberg talking about not only a 25 basis point cut, but a 50 basis point cut, and thinking that the Fed funds rate should be 150 to 175 basis points lower. That's got a bid in the 10-year and yields going lower. So that might be part of what is fueling stocks at current all-time highs and looking slightly higher today. Also an upgrade of NVIDIA. Remember, we're 2 weeks now away from their earnings report coming out on August 27th. So a lot going on. You alluded to the Friday meeting with President Trump and Vladimir Putin. I think that's important for geopolitics. But all things considered, shaking off some earnings in Cava and CoreWeave, this market looks like it's on a path that is drifting higher, Sam.
For a sort of a weaker season, particularly in August. As you mentioned, so many moving parts, Kevin, for these markets. We are, of course, coming to the sort of tail end now of those earnings. As you mentioned, we are certainly waiting for what has been sort of called the Super Bowl with NVIDIA. But, to your point, we are keeping an eye on the commodity space. No doubt some of those expectations around that meeting, keeping things in check there. But, you mentioned, obviously, the yields, no doubt, coming off a bit is going to offer a bit of a tailwind for those equities as well. But, back to what we heard yesterday from the CPI, and now, as some would say, is giving a bit of justification for that September rate cut. I mean, we've still got some data to get through before that decision is made. So no doubt they have to look at the sort of overall inflation picture and other economic factors here. But we're going to hear from some more Fed speakers today. What are you looking out to hear from them?
Well, whenever a Fed speaker talks, and we're going to get 3 of them today, Thomas Barkin, Austin Goolsbee, Raphael Bostic, we're going to get them speaking today. You want to hear their tone. They're going to set a tone, and the tone is certainly changing towards rate cuts. And so, remember, you've got an August 23rd, Jerome Powell speaking at Jackson Hole. That'll be the next big kind of proxy Fed meeting, because he's going to make comments, right? We have no August meeting, so that guides us towards the September meeting. And it looks like the tone is starting to change towards rate cuts. Now, it looks like a 25 basis point rate cut now is pretty much baked in, but based on Scott Bessent's comments, based on a general tone and momentum, watch for the probabilities of a 50 basis point cut start to creep in to these markets. It's already, you can see it on the CME Fed Watch tool. It's very low, but it's starting to gain just a small amount of momentum. Let's watch. We've still got plenty of time between now and the September meeting. That's what I'm watching. Is that 50 basis point cut starting to gain any traction or momentum? And comments from Scott Bessent, comments from Fed speakers, that'll guide us, Sam.
Yeah, no doubt the Fed is taking in all the data, not just, of course, the CPI. We're looking at the PPI tomorrow as well. What's going to be really interesting is to see if some of those producers are actually picking up the tab for now as far as some of the tariffs pass through. But, I've just seen a note out suggesting that the PPI does precede the CPI. So a stronger PPI this month would not be reflected in the CPI until next month, which is certainly interesting. But you've also been looking at the mortgage apps, which fits into the broader picture. What are you seeing there?
Sure. Mortgage apps, which are probably the place where you can see the quickest response to lower interest rates that we've gotten over the last week or so. The composite, 10.9% higher for mortgage apps. So that's where, remember, there's no sector of the U.S. economy that needs lower interest rates more than housing. And the way I perceive it is when rates are sitting here stubbornly high and you may perceive that they may be lower in the future, a queue forms. Right? You're not rushing into the market now. You're waiting for those lower rates, and you're seeing the effects of the lower rates. When they move down, you'll see a rush into mortgage applications. So really good, strong numbers out of mortgage apps. That's really good for housing. Let's keep watching housing, see if we get any recovery in the second half of the year based on the perception of lower interest rates.
All right, Kev, you touched on crude just a little earlier. No doubt the commodity space is a little bit of wait and see mode ahead of that Trump and Putin meeting, and particularly because we've seen this sort of prevailing narrative returning to the market of, a bit of an oversupply situation. But I do want to park that there and just get your thoughts very quickly on some of the big earnings that we've heard. Two very different businesses, but telling us a lot about the market, certainly the consumer and the whole tech space. Cava and CoreWeave. What are you seeing there from those report cards?
Yes, I'll be quick. Cava, this is a company with less than I think it's 290 or 390 stores, so a very low footprint for stores, but they want to get to 2,000 in the next couple of years, but they didn't see the same store sales growth that they wanted to see, and they guided slightly lower for those same store sales. So they're hitting that pretty hard here because why? This is a growth company, and if the growth starts to decelerate, that takes a lot of the valuation out of this company. So there's Cava, right? They're a competitor to kind of Chipotle and Mediterranean food and fast casual dining. Now, CoreWeave, that was just all things considered, this is a company that should be flourishing in the environment where we find ourselves with AI infrastructure, but their numbers were relatively mixed, and I think that's why you're seeing that stock down. So two names with growth and great prospects for the future that underwhelmed on earnings, both down to start the day.
I think that really sums up what we've seen for the earnings season. Two names, two stories, bifurcation when it comes to AI and also the state of the consumer. Kevin, thank you so much for getting us across all those headlines today.